At the same time, Growthpoint Properties has identified the V&A waterfront as a standout performer and expansion plans are on the table. Chief Executive Estien de Klerk joins us for more. Thank you so much for your time. Let's first talk about the highlights of these results, where exactly you are seeing the expansion possibilities, particularly in the city of Cape Town.
Yeah, thank you very much. Yeah, there is quite a few opportunities and positives to be taken from these results. In a way, the property fundamentals locally and across the globe have improved quite a bit. And, you know, other than the V&A, we do have some spectacular assets in Gauteng and in Australia, Eastern Europe and the UK that continue to deliver, you know, strong returns. I think the growth opportunity in the Cape is reasonably evident from the demand that we're seeing at the V&A, and actually broadly in Cape Town. You know, even the office sector there is performing well, and I would argue that you know, given what we have seen over the past 5 years in revaluations, where we've written down the values of those properties quite significantly, the office properties across the board, you know, that sector will probably perform reasonably well for us if we continue to see the trend where there's actually strong demand for offices in Cape Town and Durban, and we're seeing quite a lot of activity here in Gauteng, a lot of volume of transactions. Obviously, here in Gauteng, there's still oversupply and the market remains tough, but vacancies have come down. We've even reduced vacancies here in Sandton by 20,000 square meters, which is a little bit positive. And on the debt side, I heard the commentator earlier speak about, you know, the pain still to come, and as higher interest rates flush through our income statement, you know, it obviously goes into the base, and hopefully once that's done, you know, when interest rates do come down, or even if they remain stable, you know, we will see the benefit of growth. And many of the other real estate companies, competitors, might have a later experience on their income statement, in that their hedges or their interest rate fixes may be longer than ours.
Now, briefly, as you mentioned in the latter there, the downside, how do you strategically plug the goals, particularly because in the property sector, whenever there is a crunch in the consumer's pocket, we then tend to see it as a long-term trajectory of a downward spiral?
Yes, so I mean, the higher interest rate environment is clearly negative for the South African economy, and I mean, globally, we're seeing the same trend, whether you're in Australia, or Romania, or the UK. I think the reality is that the consumer, we are playing a little bit of catch-up as the real estate industry. Through COVID, many of our leases were renewed at super low levels, given the difficult environment that we went through, and we've seen quite strong growth over the past couple of years in our retail shopping centres in terms of the trade per square metre. We refer to it as trading density. I mean, in December, that trading density year on year grew by 5.9%. So when some of these leases do come up now, you know, the renewal decline is really pretty insignificant. And in fact, there could be a possibility that you start seeing actual net rental growth. There is the expression which says inflation is property's friend, and you know, where we've seen inflation specifically probably impacts the industrial sector first, because you know, the new boxes that you build there, the big new warehouses, are probably cost today 40% more than they cost 3-4 years ago. So that means the new rentals are significantly higher than the existing rentals or the embedded rentals in the leases. And as these leases unwind or renew, you know, one should over time start seeing a bit of pickup, as long as the demand remains strong. And in industrial, we've certainly seen strong demand.
Thank you for your contribution. We'll have to leave it there. That's Growthpoint Properties CEO Estien de Klerk talking to us about their latest financial performance, mixed as it is.